financial crises don't tend to break out where they start. They tend to really sort of play out and cause a real crisis in the place that is most vulnerable. And so in this scenario, we have a story where the crisis is starting in Japan, but everyone's wondering, well, where is actually especially vulnerable to this? Japanese investors own lots of American, US tech stocks, so tech stocks sold off. Japanese investors own lots of UK government bonds, so UK government bonds sold off. That is heavily leveraged players and speculative investors, mostly from hedge funds, that are determining the short-term price in the UK government bond market. And therefore, this price instability is especially important to us in the UK, with our government having to borrow based on what short-term investors and traders are deciding should be the price.
Hello and welcome to the MoneyMagpie Invest podcast. I'm Jasmine Birtles, founder of MoneyMagpie.com. And before we start, remember to subscribe, like, comment. We always look at your comments, and tell all your friends how fabulous we are. You know you want to. Now, it's been a bit of a week financially across the globe. All sorts of things have happened. It's hard to know, frankly, which part of the globe to look at for the latest news. But one aspect I think has not been covered anywhere near enough by the mainstream media is Japan, and specifically the Japanese bond market. That is, I think, quite a major move in the financial markets. And to unpick it for us and explain why it is quite something, what's been happening this week, specifically in Japan, while everybody's been looking at Trump and Greenland, Japan has been doing all sorts. I've brought in my friend Nick Hubble, who actually lives in Japan and is also the editor of the Fleet Street Letter, which is produced by South Bank Investments. Hello, Nick.
Yeah, it's good to be back. We've been making a habit of this lately. It's a bit of chaos here in Japan.
Yeah, I know it's quite something to have another country that's probably currently more chaotic financially than Britain. Yo, go up.
An impressive achievement.
It is, it really is. So can you explain to us in words of one syllable what has actually happened in Japan to make this big wobble in the bond market and what that has meant for the rest of the world?
Yeah, it's a very similar story to the whole Liz Truss debacle of 2022, but with an election thrown in for good measure. So the new unelected Prime Minister of Japan, first female Prime Minister, I think it is, announced that she wants to have an election. But what makes this interesting is that she is campaigning on a fiscal policy that closely resembles Liz Truss's policies. Of course, Liz Truss didn't go to an election, but it's much the same story and much the same reaction from the bond market, with Japanese bond yields, meaning the interest rate that the government would have to pay if it were to borrow money, which it does in Japan especially, has shot up to record levels, but more importantly, at a record pace. As Liz Truss proved very interestingly, it's the pace, the jump in the yields that's the key, because it's unexpected, because that causes a big loss to the investors. And so all of that story is playing out in Japan right now. And so there is fears that as this campaign for an election, I can't remember what the date is specifically, over the next few months occurs, there's going to be a whole new Liz Truss moment for Japan. And the reason this matters to the rest of the world so much is that Japan as a country, the investors in Japan, own lots of foreign assets. They invest a lot in other countries. The reason for this being that they have a trade surplus. So when a country has a trade surplus, it means they invest in other countries' assets. And in Japan's case, they own a lot of UK government bonds, which brings this right back to the whole Liz Truss story once again. Japan invests and finances the UK's deficit, its fiscal deficit. So if Japan were to get in trouble in its own fiscal deficit, it implies that they're probably going to start selling some foreign assets. They're probably going to start selling some investments they hold in the UK, which includes the UK government bond market, and also the US, actually, I should mention. But the interesting part is the UK, because we're especially vulnerable to this. And so Japan's problems cause problems for everybody else, in anticipation of Japan repatriating its capital, bringing back its money to Japan to try and save itself. And that's why all this became a bit of a domino chain. And what's interesting about financial markets is that financial crises don't tend to break out where they start. they tend to really sort of play out and cause a real crisis in the place that is most vulnerable. And so in this scenario, we have a story where the crisis is starting in Japan, but everyone's wondering, well, where is actually especially vulnerable to this? Japanese investors own lots of American, US tech stocks, so tech stocks sold off. Japanese investors own lots of UK government bonds, so UK government bonds sold off. And so, you can understand how this sort of spread all around the world, even though it's really just the announcement of an election in Japan. And something I want to add here is that there's been lots of debate about what caused this latest financial turmoil around the world. And the media and politicians are pointing to Trump's story in Greenland. But because the Bitcoin market trades 24/7, it trades over the weekend, we can identify when exactly it was that the turmoil started in financial markets. And sure enough, it is Japan that was the trigger, not Greenland.
Yes, I've heard that there is a connection between, if you like, Japanese bonds and Bitcoin. I mean, again, it seems that we're talking about a whole load of leveraged cash that's going into Bitcoin and, as you say, tech stocks. Is that something you've heard about?
Yeah, the leverage issue is interesting because what's happened during the last few years, especially in the UK bond market, is that it's not traditional investors who are the marginal buyer, meaning the buyer and the seller of bonds who's sort of skittish, who's willing to buy and sell based on what the news is. Historically speaking, pension funds, the Bank of England, and big organizations have bought UK government bonds and hold on to them. They've held on to them. And they don't really care about what the news is week to week or day to day. But over the last few years, there's been some investors that are willing to trade rather than invest for the long term. So they're willing to buy and sell based on what the news is on a day-to-day basis. And that's a bit like Bitcoin investors, right? And that shift has meant that the price in the UK government bond market is determined by these traders and by investors. So if something happens in Japan, they might actually react to it in the UK bond market. And part of what they do is that they use leverage to invest. So a hedge fund's not so interested in buying a UK government bond based on the yield or the price. They're interested in making a speculative play on what might happen in the next few months. And in order to trade that for a significant enough gain, they'll use leverage. And for those who are interested, they can look into what's called the repo market, repurchase market. But the point is that they make significantly larger bets than just investing their own money. So when a very small change in Japan happens that causes those investors to question whether they should be investing in UK government bonds, the resulting move is much larger than just the initial amount of investment they made because they're using that leverage through the repo market. So the moves are they're outsized, they're disproportionate to what the news in Japan should mean for the UK bond market. And actually, it's the Bank of England governor that's been warning about this recently. He's been pointing out that it's heavily leveraged players and speculative investors, mostly from hedge funds, that are determining the short-term price in the UK government bond market. And therefore, this price instability is especially important to us in the UK with our government having to borrow based on what short-term investors and traders are deciding should be the price.
Yes, as you're talking, I'm thinking of George Soros betting against the pound back in, what was it, the 70s, 80s, 70s? And it feels like our lives, our day-to-day lives here in Britain are being affected, extraordinarily affected by chancers, traders, people who want to make a fast buck.
Yeah, this is one of the fears, and President Trump spoke about this at Davos. He said that in the past, when there was good news, the stock market would rally, and when there was bad news, the stock market would fall. And he lamented the fact that lately, when there's good news, it means that the central bank will hike interest rates, and so that's bad for the stock market. So the stock market will go down. And when there's bad news, it's actually good for the stock market because the central bank will cut interest rates in response to bad news. And so this caused a bit of a bipolar, a bizarre relationship between stocks and what the news is saying. And what's flipped here between those, the obvious understanding and what's happening lately is the governments are in so much debt that what's going on in the economy and financial markets is less important. And what matters more is how central banks will respond to this. So if you've got a bond crisis in Japan going on, people don't think about, well, what's going on in Japan? They think about, well, what is the Bank of Japan going to do about it? Or what is the Bank of England going to do about it? So the worse the news is, the more likely the intervention from central banks. And therefore, the better the future looks, because the Bank of Japan and the Bank of England will do something about it. They'll save us, they'll rescue us. It's a lot like in the 2008 financial crisis, when the banks that were really failing were going to get bailed out. So you should buy their shares, right? So it's counterintuitive. But what's flipped again is the fact that we're in too much debt, the fact that we're in trouble in the first place, and the fact that this is such a messed up scenario to start with, the fact that everyone is so vulnerable to these small issues because we're all teetering on the brink. We're all, one small crisis away from either a rescue or a complete calamity. And so, like I said at the beginning of the video, the fact that Japan is starting to wobble, half the people are panicking because they're like, well, if Japan goes, they're going to sell UK government bonds and it's going to be a big disaster. The other half of people are saying, well, great, we're going to have a rescue. The Bank of England's going to have to do something about this because they can't ignore this. So they're optimistic. And this has created a really weird situation now where all of the incentives and the predictions are very messed up. And we're trying to second guess what governments and central banks will do about a problem rather than what is actually going on in the underlying economy. And that's not healthy in the long run. In fact, it is extremely unhealthy because financial markets are pricing in the response of governments instead of what's really going on, the reality on the ground.
But surely it gets to a point, as you say, not just Britain, but so many of the Western countries are incredibly in debt, many of them more so than us in terms of percentage. And you just wonder, do the governments, do the central banks have the clout, have the power, have the money to bail out what they need to bail out? Will they need to be bailed out again, like we were in the 70s by the IMF?
Yeah, well, they have the clout because their balance sheet is infinite, meaning they can create the money to support their governments. They can create the money to buy the government debt to ensure that the government is financed. What makes Japan so interesting is that they're quite far down that road. They've been doing that for a very long time. In fact, the Bank of Japan owns, I think, more than half of the Japanese government's bonds. So they finance the government to 50% or more. I can't remember what the statistics are at the moment. So they're sort of testing the limits of this theory. We've been through this many times in the past. Historically speaking, governments controlled monetary policy directly rather than through an independent central bank. So we were in a simpler to understand scenario. Right now, the question is, will the central bank support the government? And what made the Liz Truss moment so interesting is that it was an example of the central bank not supporting the government by buying their government bonds. So usually, when there's a crash in government bond markets, meaning the government is struggling to borrow money, the central bank will say, well, we can't have that. That's too big a crisis, so we're going to lend the government the money. That's what happened many times in the past. But during the Liz Truss scenario, that didn't happen. The central bank, the Bank of England, delayed its support by several days and allowed the bond market to crash, which is what makes conspiracy theorists really come alive here. Why did the Bank of England, having bailed out the government many times in the past, decide not to do it for several days, allowing a crisis in the case of Liz Truss? The argument is actually quite reasonable. It's that, if you have a pandemic or you have some sort of external shock, then it's reasonable for the central bank, to try and bail out the government. If you have any sort of random crisis. But if the government is the one causing the crisis by having bad fiscal policy, and it might have been bad, that's debatable, then it should allow the bond market to tell the government, well, actually, we think your policy is bad, we're not going to finance it. But the question is, what is the right monetary policy? Is Liz Truss's policy the right policy? Is the Japanese Prime Minister's policy the right policy? There's lots of debate about that. But right now we're living in a world where central bankers are deciding whether or not to support the government's fiscal policy. They can decide, we don't like Liz Truss and her policies, we're not going to support her during a crash. Therefore, she's no longer the Prime Minister. We have central bankers deciding we don't like the Japanese Prime Minister's campaign promises. We're not going to support her. We allow the bonds to crash. During the French elections, in the first round, the National Rally won, and the bond market had a crash. And so in the second round, the left-wing alliance unexpectedly won. that's an example of the central bank allowing the bond market to crash. And the question is whether that's election interference, because the central bank, in this case, the European Central Bank, is deciding whether or not to support or not to support the populist national rally, or to undermine them or allow them to be undermined by the bond market in order to influence the election for someone else to win. We also saw this in Greece in 2015 and in Italy in 2018, when bond market crashes cause votes basically to move between who should be elected to those governments during elections. And in Greece, we saw it for a referendum. So that basically the government eventually was forced to impose the policies that were dictated by the central bank, because the central bank said, well, if you don't make the pension cuts and if you don't make the spending cuts and the pension reforms that we want, then we're not going to support you in the bond market. So we're in a situation now where central banks are deciding what governments can and can't do. And you can kind of understand why, because if governments make the wrong policy, then central banks shouldn't be bailing them out. But on the other hand, that's a real judgment call, and whether central banks are making the right call is completely open to question. Actually, I just watched an interview with Nigel Farage at Davos from Bloomberg, which was about this topic. It was about whether Nigel Farage could count on the Bank of England to support his government in the bond market or not. And the point was that Nigel might have to appoint a new Bank of England governor who agrees with this economic policy and is therefore willing to support the UK government in the bond market in the same way that central banks have supported governments in the past, so that he can actually impose his policies and not end up like Liz Truss.
Well, yes, because as far as I'm aware, Andrew Bailey, our current governor of the Bank of England, is a Fabian, is he not? I mean, he is avowedly left wing, so I would suggest that wouldn't go terribly well with a Farage government.
Yeah, well, it's a real challenge because, like we mentioned earlier, governments are so over indebted that they rely on the implicit or explicit bailout of their central banks. So the UK government bond market relies on the fact that if there is a crisis, the Bank of England would do something about it. The Japanese bond market relies on the fact that if there is a crisis, the Bank of Japan will do something about it. So if someone like Liz Truss becomes prime minister, or someone like Nigel Farage, or someone like Sanae Takaichi in Japan becomes prime minister, the central bank only has to be reluctant to act in order for their preferences to make themselves felt. We saw this especially in Greece and Italy in 2015 and 2018, because it was the absence of a bailout that was enough to cause chaos in the bond market. So it's a very awkward situation. And, half the time I find myself thinking, this is outrageous because central banks who are unelected are controlling governments. And the other half of the time I find myself thinking, well, central banks shouldn't be printing money to support governments based on what their fiscal policy is. Governments should be judged based on whether their fiscal policy is sensible based on everybody else as a lender. So I can see it both ways, but we've sort of maxed, the incentives or the context changes radically based on whether you're spending on your credit card at a reasonable level or whether you've maxed out your credit card. It's like the flip of a coin. It's a completely different scenario whether you've maxed out your credit card or you're still sort of within the limit. And that's what's the limit we've hit now with governments. The incentives and the situation, the context have radically changed now that we're in too much debt. And that's what creates this unusual scenario. Governments and politicians are mostly behaving like we're still just early on in the credit card debt cycle, whereas central banks are like, well, hold on a minute, you've borrowed too much, guys, so we can't continue this. And that's the battle that's going to define the next few years. Most people don't realize that. That's what makes this so interesting is, who's aware of the fact that the government of the UK relies on an implicit bailout or an available bailout from its central bank. The fact that the Japanese government relies on an implicit or available bailout from the Bank of Japan. And the fact that there's some bureaucrat or a group of bureaucrats and academics on these central bank boards deciding whether or not to support these bond markets. It's something's flipped and democracy hasn't cottoned onto it yet. And unless we're careful, we're going to get even more radical change than a reform or a Liz Truss government or a Sanae Takaichi in Japan.
Well, yes, and this is something that I keep saying, that as far as I can tell, because of the nature of politics and the nature of people who vote, we the voters, as it is at the moment, the kind of swinging cuts that need to be made across the West cannot be made because anyone who has an attempt at it. I mean, we see, in France, every time the government attempts to make some little cuts, they just get toppled completely. And it seems to me that, until we get some sort of a crash where everybody, all the voters go, oh, there really isn't any money. Oh, right. Okay. We really are going to have to make some cuts. Then we're going to continue to borrow on that credit card, I assume.
Yeah, that's the irony is the magic money tree is real. Central banks can print money. Central banks can print money and buy government bonds to finance the deficit. But democracy just adjusts to that, right? The magic money tree is only so big. It can only produce money so fast. So all that happens is you adjust and you demand even more. And so we've gone from demanding what taxpayers can reasonably pay to demanding what central banks can reasonably print up to demanding too much. And after that, there really is nothing. After that, we do get into absurdistan,
Yeah.
ridiculous levels of money printing that do have consequences. And that's one of the ironies. And you're right, exactly right to mention France, because it's really experienced what this situation looks like. And Europe is the first to go through this crisis generally because the European Central Bank is responsible for all of Europe, all of the countries in Europe. So it's not as aligned with any particular national government. So Greece was the first to go, and Italy was the next to go, and Cyprus, because there's a limit on what Germans and French and everyone else are willing to accept for Italy or for Cyprus or for Greece or for Spain. So the constraint was a little bit tighter. But the point is that democracy just adjusts for what resources it can, grasp. Taxation's maxed out, money printing's maxed out. There is nothing else. So now the reckoning is going to hit, and the connection between demanding the government spends more than it takes in taxes is going to result in inflation more directly than it has in the past. So all of a sudden, as you say, people are going to discover that actually there is no magical solution that can deliver them more than they want to pay in taxes. And so there's going to be this reckoning. And the interesting question right now is whether the populist parties of Europe, because the reckoning will happen first in Europe, are going to be like Truss and Thatcher, where they're all about tax, so they're all about spending cuts, or whether there's going to be some more fudging of the accounts and trying to lie to people a little bit more in various different ways in order to try and squeeze some more blood out of the stone in order to get elected, basically, or whether there is going to be a proper reckoning where we try and balance the books. And I think what's happened in Argentina is maybe our best lesson, that it is only a matter of time before some sort of reckoning results in more sensible policy. But there's a heck of a lot of voters in the UK who are living off the presumption that will never occur, that they really can just get blood out of a stone.
Yeah, there really are. And the other thing that I wonder as you're talking is why investors are still buying gilts? Why, particularly pension funds? I mean, I know they're told they have to, but surely this is not a good play. I mean, I don't touch gilts. I don't trust any of them. What do you feel? Why is it that people are going in? Is it the short-term gain, the 10-year bonds? I mean, I find it hard to fathom, to be honest.
Yeah, the way to answer this question is to consider the various different possible buyers and what motivations they might have. So banks have to own government bonds, basically for the capital adequacy regulations, the Basel rules, meaning that government bonds are considered risk-free and banks have to own a certain amount of risk-free assets. So there's an example. Similar for insurance companies. Then this is the key point with the Bank of England governor's message, which was that hedge funds recently have been speculating on the fact that UK government bonds, the yield rose higher than sort of our peers, meaning price fell lower than our peers. So it's sort of a gamble that at some point will normalize because we're not actually as bad as Europe. So things will sort of reversion to the mean. There's foreign investors like Japan, which we've spoken about, who might want to diversify. And then there's just the idea that if there is some sort of a crash or crisis, historically speaking, there has been a move back to government bonds. So UK investors might panic and buy government bonds because at least you're guaranteed a payback, even if it is with printed money. So there's many different buyers in sort of the universe of financial markets who might want to own government bonds and buy them right now for regulatory reasons, for short-term reasons, for taxation reasons, even. So there's still sort of plausible buyers there. But the key point is they're all gambling on the Bank of England printing enough money to ensure that they would be repaid their investment at the very least. And one of the things that Japan has learned over the last few years is that if you solve your excessive government debt and deficits by printing up the money, by asking your central bank to print up enough money and buy the government bonds, the result is that you save your government bond market, but your currency has a crash. And this is what's going on in the yen right now. So my pay is, I think, doubled over the last, I can't remember how many years now, simply because I earn in pounds and my expenditures are in yen. And the yen has completely crashed because there is this expectation, or even it is occurring, that money is being printed to finance the deficit, and therefore there's more yen, and that devalues the yen. So the interesting part of this is that many different countries are in that same situation. Historically speaking, we might have a meltdown in Japan that looks like this, or we might have a meltdown in Germany that looks like this, or we might have a meltdown in Russia that looks like this. So one currency crashes, and that's where the consequences felt. Fine. But right now, it's almost every government in the world that is facing the same situation. So what happens when all currencies devalue at the same time? And part of the answer is inflation. But the interesting question is, I don't think we've been in a situation, historically speaking, where all governments have behaved equally badly at the same time and relied on this situation, this solution of central banks printing too much money at the same time. So if all of their currencies sell off at the same time, it's a pretty unique situation. And one of the things we write about in Fleet Street rather is why people should own cryptocurrencies like Bitcoin, or why people should own precious metals like gold and silver, because they cannot be printed. And so if you get this devaluation of all currency, almost all currencies across the board, that implies that commodities will increase in value relative to those currencies. Instead of, historically speaking, there's lots of interesting stories of Americans living in Germany during the period where Germany printed money in order to pay off its deficits. Americans were incredibly wealthy in Germany during that period because they had US dollars. The German currency was selling off. Or, Americans or Europeans living in Argentina were really wealthy. Or me living in Japan, because I own foreign currency, I'm really wealthy here because the yen's crashed. The cost of living is ridiculously cheap. So I'm an example of this myself. But like I said, Japan's the canary in the coal mine. Everyone else is in the coal mine too. And that's a news story. We haven't all been in the same boat or stuck in the same coal mine when the canary drops dead. So this creates a whole new scenario.
It really does. It's that all bets are off. It's hard to know, as you say, other than cryptocurrency, well, Bitcoin and gold and silver and money metals generally, there doesn't seem to be anywhere else to run to right now.
Yeah, there are options. That's what we discussed in the Fleet Street letter, where people should own their assets and keep their wealth. But yeah, the fact that it's unprecedented, and there's a couple of other unprecedented stories happening, like demographic decline, and the end of America's empire and things like that, where the problem is all bets are off, as you say, but people have got to try and manage their wealth, right? So they can't have all bets off because there is no all bets off. Usually, when you say all bets are off, historically that would mean you just hold cash, right? You just take all bets off. But even owning cash is a risk now. So you can't take all bets off. You got to invest your money somewhere.
Yes.
So that's the challenge that we deal with at the Fleet Street letter.
Well, brilliant. Thank you so much. Nick Hubble, you are the editor of the Fleet Street letter produced by South Bank Investments. You live in Japan. Thank you so much for explaining the Japan situation and how it affects us. And I suspect that we're going to have you on again probably in a few weeks' time. It's all happening pretty quickly. So thank you very much indeed. If you wanted to see Nick Hubble's letter, his regular letter, it's the Fleet Street letter. Look that up on Google. So I've been Jasmine Birtles, editor of and founder of MoneyMagpie.com. This has been the Money Magpie Invest podcast. Like, subscribe, comment. We always look at your comments, and tell all your friends. And I'll see you next week.